Good afternoon, everyone. Welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of accounting and financial management for bankers. Okay, so as I told you that this is our master class, so let's continue and talk about the various topics of module A. That is, we are talking about the first module. That is, today I'll be taking up the top 25 questions. So let's talk about the area of accounting and financial management for bankers. Okay, this is the first question. This question says that what will be the effect if the sales return of 50,000 posted 48,200 and purchase return of 46,000 posted as 47,800. This question relates to the area of rectification. That means I have seen that there is an error. How do I rectify that error is to be considered here. Right? So let's talk about this. The question says, what will be the effect of sales return? Sales return of 50,000 posted as 48,200. Sales return means return coming back. That is coming back to me. That means my income is being less. My income is being reduced by 800. Isn't it? Not going into deeper accountancy, but in the overview if I talk about purchase return of 46,000 posted as 47,800. This means in this case what I did is I have returned back goods. That means kind of I have to get the money back from them. So in this case I will have an income of 46,000, but I have posted it more. In the first case I have shown less income. The loss has been noted. This is my loss, which is noted less, right? It was of 58,000 while I have noted it of 48,200. While in the second case, if I look at it, it is 1,800. My expenses have gone up by 1,800 in this case, right? Got the point? In this case, I have shown lesser of one loss. I have lost income, so my loss of income is loss of income. I thought I have got 50,000 rupees. I was supposed to get 50,000 back, but I have shown less loss. Correct? That means I have to book more loss. What will be the effect if the sales return of 50,000 is posted as 48,200? That means I have booked a loss of 1,800, which is lesser. I haven't booked this part yet, so I have to book my loss. And at the same time, purchase return of 46,000. I am giving back 46,000, but I have wrongly noted as I will be getting 1,800 back. So technically, I have booked an income there. This is basically purchase return 46,000 is basically what? It's a kind of income for me. So I was supposed to get 46,000 back, while I have shown it as 47,800. That means I have shown my expense to be more less by 1,800. If I say, pata hai, I need to get 46,000 money from that particular person, but I have shown, the person is supposed to give me 47,800. That means I have made a mistake of 1,800 again. So in this case, the point is there is a total increase of 3,600 that has to be made. Now, what do you mean by this? In terms of profit or loss, it is based upon expenses and incomes. So in terms of expenses and incomes, sales return is less of income. So I have shown that I have booked that out of 50,000. I was supposed to get 50,000 back from the people now, while I have got 48,200 back. That means I was supposed to reduce my income more by 1,800. There is a clear point where my income is decreasing, and at the same point of time, this point is that purchase return of 46,000 is noted as I was supposed to get 46,000 back from I was giving back to the person, and I wanted 46,000 rupees in my hands. But I am thinking, I will get 47,800. That means 1,800 is wrong here as well. So overall, the impact went up to 3600 in total. So in this case, it went up to P&L, or my profit is being shown more by 3600, because overall my loss is booked less and the money that I was supposed to receive more, I have booked it more. So there is a total difference of 3600. Okay, a little trickier question, I believe, but yes, I hope I made it clear regarding 1800 and the second 1800 as well. Okay, now comes the next question. This is related to the area of revenue expenditure. You must have seen my YT class, which was related to this. And the paid people, the paid batch has already done this in their paid batch as well. So let's talk about it. Loss of goods for rupees 12,000 due to fire is a revenue expenditure because loss of goods for rupees 12,000. Technically, I was supposed to get 12,000 worth rupees goods and I was thinking, I'll make money out of it. But the point is, this particular, these goods are gone. They have burnt up. So if they have burnt up, there is nothing I'm getting now. It is recurring in nature. We call it revenue expenditure because it will again be repetitive. It is very small in amount, or losses arising due to business operations, or none of the above. Revenue expenditures are those which are day-to-day business. Goods are day-to-day business for the organization. So the loss portion is basically what? This is arising out of business operations. Because we are doing the business operations, that is why it is coming up. So in this case, the correct answer would be loss is arising out of the business operations. Right? Next point. It says, prepare the accounting equation for the following. What was accounting equation, everyone? Do you remember it? Okay, let's look at the accounting equation. Accounting equation says that the capital plus the liabilities is equal to assets. And they have asked what is the value of the capital at the end. This kind of question can be asked in the form of case study. We started a business with 1 lakh rupees in cash and 20,000 in goods. So technically, I've got two kinds of assets, 1 lakh and 20,000. Now, if nothing is stated, that means the entire 1 lakh 20 is basically put from my pocket, isn't it? There is no liability yet. So right now, it is the liability side and asset side are equal. Sold goods worth rupees 10,000 for rupees 12,000. Now, these goods are out of 20,000, 12,000 is gone, right? Because I have sold the goods worth rupees 10,000, sorry. The worth of those goods is 10,000. So right now what I have is 10,000 while I have got a cash of 12,000. So there is a profit. Where would you put the profit, everyone? 112,000. In this case, two things have happened. Number one, in this case, first thing is we have lost our goods and we have gained cash, right? So in this case, if I've gained cash and lost goods, so my ultimate amount of goods which is left in terms of cost is 10,000. And my assets, my cash is increasing. I've got 12,000 rupees, so I'm quite happy. But the point is, this point is 1,22,000. If I make a profit, profit always goes to the business entity. Concept says it goes to the proprietor. So now do we know that he has got 1,22,000 in his pocket? Hai he has got 1,22,000 in his pocket. And then we purchased a furniture on credit. So what I did is, I have added 30,000 more here. I have added a furniture. There is one more asset and I've also got it on credit. That means I'm supposed to pay. So this particular person is my borrowing. So this is an accounting equation. Got the point, everyone? Is it clear? I hope it's helping. So in this case, first is, what is the value of the capital at the end? 1,20,000, 1,22,000, 1 lakh, that is 20,000 or 1 lakh? The value has remained the same or it has changed? The value has changed. So in this case, the correct answer for the capital at the end is 1,22,000. So correct answer is A. Done. Next point. There is a machinery. This is related to the area of depreciation. Again, in the module 8 is there as a chapter. Machinery's value was 12 lakh. Salvage value was 1 lakh. Useful life is 10 years. Use sum of year digit method of depreciation to find the book value. Okay, let's talk about this question as well. The machinery is valued at 12 lakh rupees. If I sell it in the market by the end of its life, after 10 years, if I'll sell it now, it will be 1 lakh rupees. So technically, what is the depreciation that I'll be charging? I've got something of 12 lakh. I will recover 1 lakh. So technically, it is currently of 11 lakh rupees. This is the area of depreciation. Now the problem is they don't want us to find out the value today. They don't want to find it tomorrow, but they want it after 3 years. So first of all, what is sum of digits method? Sum of digits method says write down the number of years it is going to be used. 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. So this particular machinery can be used for 10 years. So I have written 10 there. What is the sum of this entire number 1 plus 2 plus 3 up to 10? What is the value? The value in this case would be exactly up to 10. When you are using it, it would go up to amount of 55. So the total is 55. And we are on year number 3, right? So we want the value at the end of year number 3. How do we calculate it? Number 1, when we started it, it was when there is a first year is going on. When we are in the first year, we have 10 years going on. In the beginning of the first year, I know, we have 10 years. By the end of second year, we know there are 9 years. By the end of when we are starting with the third year, we know when we are starting. This is the starting. When the first year was started, I had 10. When the second year started, I had 9 because 1 year had passed. And then when we are on third year, 2 years have already passed and the third year has just started. So technically we are left with 8 years. So the formula exactly to be used is, first of all, this is depreciable value. Pick up the depreciable value. Multiply it by the digit terms of this number. That is why we call it sum of digits. The life remaining divided by sum of digits. 11 lakh divided by multiplied by 8 divided by 55. Okay? So in this case, what is the answer coming up? The book value at the end would be what? So if this is the area that we'll be trying to find the depreciation, because total depreciation is of 11 lakh na. So this question can be asked in 2 formats. First is, if I have to calculate only the depreciation for the third year will come out to be 1,60,000. This is for the third year. This means that out of 12 lakh in the third year, the total depreciation is 1,60,000. I am just calculating it directly for the third year. But the point is, they are asking about book value. What is the value after the third year? That means there is a depreciation in the first year, there's a depreciation in the second year, and then we have depreciation in the third year. The formula for sum of digits method is, you take the book value, multiply it by the remaining life, and divide it by sum of digits. Okay? So in this case, we will first of all depreciation for all the 3 years. 1, 2, 3. I will calculate the depreciation, total it, and we will deduct it from the total there. The formula can be stated like this. Depreciation for the first year was 2 lakh, second year was 1,80,000, third year was 1,60,000. So the total combined depreciation will come out to be, this is 5,40,000. So what will we do? Out of 12 lakh rupees that we have got for this machinery, 5,40,000 is for the depreciation and the remaining is 6,60,000 which is left. Right? So in this case, 6,60,000 turns out to be the remaining amount. So this is the value today. Got the point, everyone? So this is called the book value. There's a formula that we did today. The formula was sum of the digits, right? That is 55. You are taking the depreciable value, which is your cost minus salvage value, multiplied by remaining life divided by sum of digits. Okay? So now let's move on to the next question. Value the stock in hand at lower of the cost or market value. Show the joint life policy at surrender value of the asset side of the balance sheet. This particular concept is covered under substance over form, money measurement, prudence, or historical cost concept. Substance over form is that you look at the actual evidences other than anything else. Money measurement talks about money. Prudence talks about being conservative. We have to look forward towards anticipate the losses now. And last is historical cost. Historical cost is once things have happened, note down the cost at that point of time. So in this case, the correct answer would be prudence. Because whatever the true situation is, we will record things at that point of time. If there is a loss, note it right away. Profits, wait for it. That is what the prudence itself says. So in this case, since we were recording things at the lowest value today, so we are talking about prudence, or it is also called conservatism. Done. Now comes the next point. Goods worth rupees worth X sold to Vijay was entered in the purchase book. Rectification is, we need the rectification to be done in this case. Chali. Now we were talking about we purchased goods worth rupees X sold to Vijay. I have sold goods to him. This is a part of journal entries. So first of all, when I sell goods to someone, it is in a situation of X to sales, right? So in this case, we are selling X to sales. We are selling goods now. So goods worth rupees, goods were sold to this particular person, but I have noted it as purchases. So it is a sale situation, but I noted that array I have purchased good from this particular person, and I am kind of I have to pay him. Earlier he was someone from whom I was supposed to get money. Goods were sold to Vijay. I'll be like, array Mr. Vijay, I have to get money from you, and now I have noted as if I have to pay him. Isn't it wrong? But in accountancy, na, there is one particular rule. We do not cut something. We will rectify. We'll put another entry there. So in this case, what will we agree? We say that array Mr. Vijay should not be noted as a creditor. He's actually a debtor. Someone who owes us money. He is supposed to pay us money. So what will we do? That we will record it as a sales and we will cancel out purchases. Right? So in this case, what will we do? We will rectify these 2 points, and Vijay has to be noted down as someone from whom I have to get money. So in this case, what will happen is that first of all, I will credit purchases and we will credit the sales. This purchases is gone now. This is wrong now. So we will take it to the other side. I will agree that Vijay is someone from whom I have to get money, and the one where I noted it wrongly, I will rectify it. See, in this case, he was a debtor. In this case, he was shown as a creditor. So this has to be nullified. So I will create another plus, and this one would be nullified. Plus minus minus. So Vijay would be noted twice in plus, and this purchases is also going. So what is I am going to do is purchases will be on the credit side. This is a part of journal there, and then this sales will also be on the credit side. So both of these things would be here. Done. Then this is credit purchases and credit sales to the extent of X and Vijay there. This is a part of rectification of errors. Done. Next point. This is a question regarding manufacturing. This is something, a part of it will be dealing in module A and a part of it will be dealing in module B. If opening stock is of rupees 10,000, if I said in the beginning that, Pata, I've got 10,000 worth rupees stock at my place, you'll be like, okay. I said, Pata, I've purchased more. What will you say? Add it up now. Net purchases is of 70,000. Right? So I'll say my net purchases is of 70,000. Then I have spent 2,500 again on conversion because I'm paying wages to the laborers now. Then carriage inward is also a direct expense because when we are getting something for us, that particular amount will be added here. Carriage inwards. So overall, I have spent 10, I have spent 70, I have spent 2,500, I have spent 500. So overall, I think I've spent a good amount of money. This is 3,000. Then 83,000 is already spent. Just to sell those goods, I've spent 83. But surprisingly, by the end of the year, I'm just left with 15,000. This means the remaining has been done with what? The remaining amount has been sold. So 15,000 is sold. So it is going to be what? 83 minus 15. Right? So in this case, what would be the value? The cost that we are incurring is 68,000. Clear-cut definition of this entire question is, in the beginning, I purchased something. Then I got something more. Then I also made some expenses. Stock is being added. I'm also paying expenses for manufacturing, and at the end of the day, I'm left with barely 15,000 rupees. So I'll agree on that point now. So I'll just note it down. So what is the manufacturing cost? 65, 83, 68 or 73. See, all the terms are there. 83 is there, and then we have 68, and then there are two random terms. So you can take any of these if you do not remember the formula. But you don't have to remember the formula. You have to remember I invested money, something I invested more, and by the end of the day, only a little part is left. That means remaining has been sold off. So in this case, the correct answer is 68,000. Done? Okay. Now, moving on. What is the main objective of the accounting standards? In terms of the accounting standards, one of the first thing is to prepare the accounting reports which is easily understood by the common man, to comply with the legal formalities, to harmonize with the diversified accounting practices, to comply the requirements of international accounting standards. So what would be the correct answer? The main objective. Accounting standards were basically prepared to bring uniformity. Because I might be doing things in my way, you will be doing things in your way. But we have to sit together and talk now. Because how will we compare our businesses? So basically, they wanted to do that. One thing is to have uniformity. But one of the things that right now the objectives have been looking forward to comply with the requirements of international accounting standards. Internationally, they have generally accepted accounting principles, JAIIB, and we have to get uniform there. If we do not look forward to uniformity at the international level, do you really think we can survive? We cannot. So we will have to look forward towards international accounting standards. So in order to look forward to that, we created IND-AS, Indian Accounting Standards. So in this case, the correct answer is to comply with the requirements of the international accounting standards. Okay, here comes the next question. Depreciation is charged in terms of the book value of the fixed assets in a systematic error appear in the balance sheet at the book value, not at the market value. See, the point is if I'm using something, for example, I'm using my phone. So my phone is being used every single day and we're trying to find out what is the book value right now. Is it going concern, prudence, business entity concept, or none of the above? If I talk about depreciation now, depreciation means there is a wear and tear, obsolescence, so everything is going on, and that is happening every single day. So that is something that is we are showing the value is declining, and then what is happening in this case, we are going to record it, but we will not record the things at the market value. If I start looking at the market value of our phones now, it declines a good number of thousands of amount goes away, and the value is declining just because I opened the box. Now it's a second hand phone. So the value declines a lot, but we do not record the things at market value till the time we are selling it, right? So if we are not selling it right away, so we'll have to wait. So in this case, this particular concept is going concern, prudence, business entity, or none of the above. In terms of depreciation, it would be going concern. We assume that things are going to happen. Going concern says that men may come and men may go, but the organization is going to continue for a long period. That is why we'll say, why to rush? Let's charge depreciation on a regular basis now. If the value is going to decline every single year, so let's record every single year separately. So in this case, the correct answer is going concern. Next question. Owner's equity stands for. Owner's equity is shareholder funds. Fixed assets minus fixed liabilities. Fixed assets minus current liabilities. Current assets minus fixed liabilities. Total assets minus total outside liabilities. As I told you, current assets, current is basically something which is within a year, and non-current is something that is there for more than 1 year. So capital plus liabilities is equal to assets. Whenever I put my own money into the business, I ask someone else to put their money into the business, and that is how I build up my revenue, or I build up my assets. So capital can be stated as first thing. So my equity is capital, and if my total investments in the business is called assets, which is helping me to make more money, so it is assets that I've got. You remove the liabilities out of it, what is left is capital. You just have to remove this plus and move it towards the opposite side. If it goes towards a different side of the equal to, it will turn into a negative term. है ना? Done? So in this case, the correct answer is total assets minus total outside liabilities. Okay. Then what would be the impact on trial balance of each of the following errors? What is trial balance? First of all, we write down journal. Okay. Let's take, this is a kind of case study, everyone. This case study is based upon trial balance. What do you mean by trial balance? Trial balance is basically a statement. First of all, we create a journal, individual transactions, then we move towards ledger. It's a tabular form. Everything is written in the tabular form. And then we move towards balance sheet. Balance sheet is a statement where everything is recorded in terms of net worth of the business. Profit and loss is basically what? Where you try to find out what is the profit or what is the loss. So these two are created out of a particular statement where everything is kept at one place. That place is called trial balance. Okay? A copy of a sales invoice of rupees 4,000 is not recorded in the sales day book. Excess credit 4,000, excess credit 8,000, excess debit 4,000, or no impact. A copy of sales invoice. Okay, there is a sales that I made, but I forgot to record it in the sales book. If I have forgotten it, technically my income is not recorded properly. So look at Cradle, capital, revenue, assets, drawings, L for liabilities, and E for expenses. So this is called Cradle, the 5 pillars of accounting. Capital is my money, revenue is income that I earn, asset is what I apply in the business to earn money. For example, building, car, laptop, phones, these are all assets. They help in generating money. Capital is my money, and if I take my money out of business, it's called drawings. Then we have liabilities, the money that I borrow from others, and last is expenses. Okay, so in this case, what's gonna happen? Let's record it. A company of a copy of sales. So basically, it's sales. It's a revenue. Your revenue is recorded less because it is not recorded at all. So among the cradle, under team debit, what comes, and team credit, what comes? Because both the teams should match. Debit is equal to credit. So ADE is debit and LIC is credit. है ना? So in this case, R is for revenue, income. So when the income is less, let's record it now. So let's credit it. We have to credit it by 4,000. At this point of time, it is something which has no impact yet. First of all, let's understand what is wrong there. In this case, it is not recorded anywhere. That means the entire transaction is missing. Such things are called omission. Omission means to forget to record or being oblivious. That is omission. There is no record of a copy invoice in the sales day book. Then there has been no prime entry. So this is an error of omission and a complete omission. It's not partial. Partial is if you record only half of it. And complete is when you record nothing of it. Next question. A supplier's invoice for 2,500 is posted to the debit of trade payable account. So basically what I did was someone had given me an invoice of 2,500 rupees. There is a person who has given me a supply of 2,500. So in this case, what has happened is that particular invoice is posted to the debit of trade payable. Trade payable is basically my creditor. Technically, creditor itself says credit. So first of all, this 2,500 is posted to the debit. So if it is posted to the debit, that means my debit side and credit side is not matching. Why? Because things which were supposed to be on the credit side is recorded on the debit side. So first of all, I will have to remove this 2,500 and add 2,500 here. So correct rectification is you take this, you show 5,000 on the credit side and this is your debit side. So automatically, if your debit side has 2,500, credit side has 5,000, so the value will become 2,500 credit. Because this is minus and then this is plus. So plus minus minus. So on the credit side we will have in this case, this is not plus minus minus there. In the business I should be recording 2,500, but I have recorded wrongly now. So first of all, wrong has to be corrected and new has to be created. So in this case it would be 2,500 which has to be created and 2,500 which we have to end up. So in this case, it will become excess debit of 5,000. So there is a mistake on the debit side. It was not to be recorded at all. So if the supplier's invoice had not been posted, the debits would have been exceeded the credits or in the trial balance by 2,500. Okay? Next question. The daily total of sales day book, that means my daily income is 3,45,000 instead of 3,15,000. So technically I have shown more by 30,000. If I say that my income is 1 lakh, in this case I am boosting that array. I've got 3,45,000, but technically I've got 3,15,000. Excuse me. So when there is a difference, what will you do? If the difference income is always on the credit side, that means a daily total is basically something which is falling short. Hai na? So in this case, what's happening is, in this case, the daily total of the sales book is stated as 3 lakh. Actually, this is not falling short. This is over. We are going over in terms of income by 30,000. So what's the difference? The difference is because we are going over. Income is on the credit side. So our income side is shown more. So it is excess credit by 30,000. The total from the sales day book is posted to the credit of the sales account. Okay? If the total transferred from the sales day book is higher than the trial balance, this is a part which you can skip up. So it is your part. If you would like to read, go ahead. But normally I would say you can think about it in such a way that our income side is shown more by 30. Income means on the credit side, so correct answer is 30,000. Sometimes the explanation might seem a little difficult. Next question. A purchase invoice recorded in the purchase day book. See, the point is I recorded it as 18,500 while there was a discount of 1850. So technically my purchase was less, my expenses were supposed to be less. So will it be shown in the excess credit of 1850, excess debit of 1850, excess debit of 3700, or no impact? A purchase invoice is recorded in the purchase day book at 18,500 without taking into account 10%. I haven't recorded the discount yet. Technically, I have to record the discount, but there is one rule, everyone. We do not consider trade discount. Trade discount is received before recording. So in this case, the correct answer is no impact, because we do not record trade discounts at all. That's a rule. It is just deducted, not noted, not shown anywhere. So in this case, the correct answer is D. Next question. This is a kind of case study that can be asked in the examination. There is a sales invoice. That means I've sold goods to the people at 21,000 and has been posted to the customer's account at 12,000. It was 21,000 and shown as 12,000. So sales invoice of 21,000 has been posted as 12,000. So in this case, that means my sales are less. It has to go more. So in this case, my selling side or my credit side is less. So if my credit side is less, that means in this case, I'll have to show it more. So there is basically so in this case my sales is shown more while the particular person, see in this case there are two elements, debit and credit. Sales is noted as 21,000 while the person in whose account we are noting, that debtor, we are noting it at 12,000. So 21 minus 12. Technically it should be noted that 9,000 is less in terms of debit side, because debit and credit has two elements. First element is debtor, second element is sales. Debtor is an asset and sales is a income. So there is one credit item and one debit item. Done. So my credit side is currently more. Okay, here comes the next question. The question says, if the gross profit on sales is 20% and the cost of goods sold is 2,500, what is the amount of sales? Okay, now let's understand this term as well. GP is when we produce something, and when we are selling, we have NP or net profit. Okay, now let's look at this. The gross profit is 20%. That means my GP is equal to 20% and my cost is equal to 2,500. This is my profit on sale, while my cost is 2,500. So one thing is, let your selling price be 100. Do you remember we used to have that your cost plus profit is equal to selling price? That is how we make money now. We are given that the cost is 2500, and then we have got the GP as 20% of sales. If the sales is X, this is 20% of X. So can I say 2500 is equal to X minus 20% of it? It is 2500 is equal to 80% of X. So we have to divide it by 2500 is 80% of something. Then what is the 100% there? Kindly find it out, everyone. What is the value that is coming up? It would be 3125. Using the basic algebraic equation. There is one more way. It is 20 divided by 10 now. 20 divided by 100. So it is 20%. So technically it would be basically 2 5s are 10. It is 1 by 5. If we have that something is 1/5 of sale, so you remove 1 out of it. The basic way is that you remove 1 from the denominator. That is 5 minus 1. It is 1/4 of cost. If anything is 1/5 of sale, then just reduce that 1 there, minus 1. That will give you 1/4 of cost. Whenever you are at cost, you want to go at sale, you plus, and from sale to cost, you have to remove the profit. So it comes out to be minus 1. So in this case, the correct answer is 3125. Generally, 20% on sales means 25% on cost. That is what they have done. So it's your call. How do you feel it easy? But basic rule is whenever you are going from cost to sales, just add 1 in your denominator and then find the values. ठीक है? चलिए, next question. The question says that Joy Limited receives a check of ₹100, records it in the cash book and deposits on the same day. I received a check and then deposited it in the bank on the same day. A statement by the bank that does not show that ₹100, because obviously it takes at least 3 days to clear a check. Now, how will this be shown in bank reconciliation statement? First of all, this is a timing difference, right? So whenever there is a timing difference, first thing first, that we have to respect that timing thing. So everything has to be recorded accordingly. Secondly, in this case, this ₹100 is still not cleared by the bank. So it is not visible. So technically, I have a check that I deposited, but it is not credited. So in this case, the correct answer is an uncredited deposits added to the bank balance, and uncredited deposits deducted from the bank balance, an unpresented check added to the bank balance, and unpresented check deducted from the bank balance. So in this case, the correct answer is A. This check is not shown in the books of accounts. So we'll show it now. Okay. Next point. The next point says there is a petition was lodged against the machinery with a book value of 2,50,000 and was destroyed, and that was destroyed by the company. The following is an example of an insurance claim that is received. See, there was a particular complaint. Basically, there was a machine that got damaged which was worth ₹2,50,000. Now, insurance companies do not pay whatever losses we have already incurred. They will always pay only for whatever money they feel would be the value of that particular thing. So technically, the organization has clearly lost something of 2,50,000 and they have raised it at, they will get 2,00,000. Technically, is this a recurring or a non-recurring expense? First of all, it is a non-recurring expense and it's an extraordinary thing. This is a capital receipt because we are going to receive money, not pay, right? So first of all, I will receive money because one of the assets of the organizations are gone. ठीक है? Done? Okay. Now let's move on to the next question. What is the last step of accounting as a process of information? Recording economic events, preparing the financial statements, communication, or analysis? The point is, when you have to tell things, it's always last point is communication, because you will have to communicate and that becomes the end. You have processed everything in your books and then you're like, this is the conclusions of it. It is called communication. Okay. Next question. It says Messrs Future has invested rupees 10,000 in the shares of Relicam Industries Limited. Current market value of these shares is rupees 10,500. Accountant of Futures Limited wants to show 10,500 as a value of investment in the books of accounts. So which accounting convention restricts it from doing so? See, the point is, if I got a share, so let's talk about it. I got a share of rupees 10,000 today, and by the end of this particular day it is going up to 10,500. Tomorrow it will go to 10,700, maybe it will come back to 9,500. It is going to keep on changing in any case. So it is full disclosure principle. Is it full disclosure principle, or is it consistency, conservatism, or materiality? Till the time I don't sell this particular thing, I should not record it in the books of accounts. So technically the correct answer is conservatism. Okay? The answer is conservatism. That means record the losses or profits as and when they happen, not before, not after. Okay? So you should look forward to preparing for the losses as early as possible. Done? Now comes the next question, everyone. The question says a business on 1st of April with capital of 5 lakh. So basically in the beginning, I had 5 lakh rupees in my pocket. And his assets were worth rupees 7 lakh 80 and liabilities are 70. So technically by the end of the year, if I make it assets is equal to liabilities plus capital, his assets were worth rupees 7 lakh 80. So he's got 7 lakh 80 in the business, while the liabilities are of 70,000 and the capital is something which is not known. So it is 7 lakh 80 minus 70,000. So it turns out to be 7 lakh 80 minus 70. It is 7 lakh 10,000. This is what? This is the amount that he should have by the end of the year. है ना? Because capital is not known. So what I did was I left the capital here and used the equation assets is equal to liabilities plus capital. I said that assets is equal to liabilities plus capital. So the money that I have in the business is 7 lakh 80. And this 7 lakh 80 is basically something where I've added 70 plus capital. So this is 7 lakh 80 minus 70,000, giving me a capital of overall 7 lakh 10. So correct answer would be 7 lakh 10. Okay, this is 7 lakh 10. And they are also asking what is the profit that you have got. You started with 5 lakh rupees in the beginning. In terms of accounting equation, you started with 5 lakh rupees and you have reached to the area of 7 lakh 10,000. So technically you have added 2 lakh 10,000 in terms of your profit only. Now, how does the capital increase? The capital will increase in two ways. One is the person gets more money. Now he's not putting more money. What he's making is from the business itself. So correct answer is, this is the profit and this is the closing capital. Done? Okay, the next question. The next question says that a business on the 1st of April 2011 with a capital of 5 lakh, Acha, we are done with this question. Sorry. This is a repetition. Next question. If the trial balance is prepared as per the balance method, under balance method, we are going to make a ledger first. First is journal. What is accounting cycle? Recording things individually is called journal. Individually is called journal. Then we will call it ledger. Individual, then there is a table. And then we have a trial balance. Trial balance is a statement. It's a detailed sheet in which we write everything. So trial balance is the statement in which we are using the balance method. What we do is finding the balancing figure. The debit is equal to credit, and if there is a difference, because obviously if I put more money and take out less, so there is a closing balance. So we, in terms of balancing figure method, we take the closing balance. Whatever the balance is by the end of the year, it has to be taken. So first thing is A. Closing balance of the ledger is calculated after totaling debit and credit side, and the balance is written on the side where the total was less. Okay. Next question. The unpaid salary of rupees 340 is to be provided for in the accounts. Basically, there is a person to whom I haven't paid yet. So this is not related to the cash. So it is something that is related to what there? Is it related to bill receivable? Am I going to receive money from someone? Purchases book, we give salary to them. It is not related to anything else, right? And then we have the area of journal proper and purchase return. Technically, all these three are different. The one which actually says general journal, where everything else is noted. There is no purchase, there is no sale, there is no money that I'm going to receive. Rather, I have to pay to these people. So technically, it is going to be C. It includes transactions relating to the credit purchases and sales of assets. Okay? So it would be C. A bill receivable of rupees 1000 which was received from a debtor in full settlement for a claim of 1100 is dishonored. Acha, basically I was supposed to get some money from a particular person and he said I cannot pay you. Technically this was related to the money only, but I had a right to receive money. Now I have lost the right because the person says I cannot pay you, I'm sorry. So this is not purchase, agreed. This is not even bill receivable anymore. It was, but not anymore. Is it related to the area of purchases? No, we are not purchasing anything. It is basically related to the area where I agreed that that particular person is going to pay me. I have ordered him. Bill receivable is basically an order to the other person that I order you to pay me this much amount of money. That is, it is not purchase book. The correct answer is journal proper. Okay? So correct answer is D. Journal proper. Okay, so that's it for the day, everyone. I hope it was beneficial for you. But before I end my session, there are certain things that I would like to discuss. So let's move on and talk about them first. Kindly go on to our website, that is